It's time, folks, to go through our ATM performance results. We love to be transparent in everything that we do. These are our results all the way through the last 3 years up until the end of last month, September 2023. Okay, let's get into this and get into our latest results. Two things that I just want to start off with saying about this program. Number one is that it's phenomenal. I know that sounds braggadocious and prideful and arrogant, but the results speak for themselves. It's just been absolutely phenomenal. Number two, I'm in several masterminds, and one of them we were talking today about how half of our success in life is attributable to just getting out of our own way. And, I have had probably a half a dozen or so people cancel their subscription to this membership, this program, in the last week for various reasons. One I would consider to be valid. They needed the money to go purchase a home. But in the other cases, they said just ridiculous things like, well, I don't have time to follow this program. Well, that's ridiculous. It takes 5 minutes a day. Everybody, if you don't have 5 minutes a day to build wealth, you don't deserve wealth. You don't deserve to be well off financially if you can't put 5 minutes a day. Another one said that they hadn't got any results. They'd been in the program for 2 weeks. This is an investing program. This is long-term passive wealth creation. It's not day trading. If you want day trading, we got that. We made $1,100 today day trading the S&P and the NDX. That's a different ball of wax. That's a whole different risk reward ratio, whole different level of focus and attention that's needed on that, and frankly, a whole different demeanor in terms of risk management. That's not what this is. This is passive. Forget about it. Let it work over time. Had one of the cancellations that basically said, my results don't match yours. This program doesn't work because my results aren't what your results are. And as we started to go down through it, he said, oh, well, yeah, I didn't take that position, and I didn't take that position, and your SPY anchor positions, yeah, I don't take those. Well, of course your results are not going to match mine if you're doing something completely different. That's how that works. Anyway, off my rant now, let's get into our results, okay? So again, just a brief review. The ATM program, the Asymmetric Trade Management System, is a passive, long-term, growth-oriented investment approach. It's not trading. Our goals are twofold: beat the S&P 500 year in and year out. That's the key metric. Not week by week, not even month by month, year in and year out. Year over year, are we beating the market? Okay? And frankly, if you have a financial advisor that you have hired, that you are paying commissions to, that is not beating the market consistently for you, well then what are you paying them for? I mean, you can go buy the S&P, you can go buy the SPY for free. You don't need to pay anybody if they can't beat the market. You can get the market returns for free. So number one, beat the S&P 500 year in, year out. Number two, do it at less risk. That's a big thing. We measure risk via standard deviation, via volatility. Okay? So that was the genesis of this program. We're traders. I'm a trader at heart. We trade Sunday through Friday pretty much all day long. As soon as the futures open on Sunday night, we're going full speed until they close on Friday afternoon. I love trading, but it's not appropriate for all of your money. And I'm going to show you a very, very small account here that I think anybody could start with. Now, you have to be careful with that because everybody is in a different situation financially, and I am very aware of that. I remember struggling financially myself, and I know that a trip around the world can be $100. If you have 90, guess what? You ain't going. So I get it. But I started this program with $25,000. And I think if you are a serious investor, you should be able to scrape $25,000 together. If you're not at that level yet, if you don't have $25,000, that's fine. But you're not really an investor yet. You are a saver. And that's fine too. That's the first step to becoming an investor, is being a saver. Saving away that precious pennies, nickels, dimes, quarters, and building it up over time. But if you are an investor, you probably have the minimum suggested amount to start this program. Okay, so that's the idea behind it. So the question is it life-changing? You know, again, I watch these cancellations come in and I just shake my head. I'm like, you are your own worst enemy. This program is phenomenal. Not based on anything that I say, just based on the results that we have garnered. You know, the last 3 years have been interesting. We've had a bull market, we've had a bear market, we've had a sort of all over the map market here this year. Up first part of the year, down second part of the year. Doesn't matter. It doesn't matter what the market does. This system performs. And if you can see tangibly through past historical results, you know, you never know what the future is going to hold, right? But if you can see tangible results, proven, documented results that show you that you could in fact turn $25,000 into $1 million in 10 years, that is actually possible. Is it probable? I don't know. It depends on how well we stick to the plan, I guess. There are, again, no guarantees in life or investing, but the opportunity is there. I think this is absolutely a life-changing opportunity. Our approach, again, is to A, beat the market, B, do it at less risk. Works for retirement accounts. It's a passive approach. Takes 5 minutes a day just to make, you know, a couple, maybe as many as 10 little adjustments to our portfolio every morning. There's no trading involved. You do those adjustments, you're done for the day. No watching your accounts, no monitoring anything. You set it and forget it. Dual fold mandate, again, beat the market, do it at less risk. Results are tracked on a net liquidation basis. We don't track how many of our positions are winners or losers, what the ROI on a particular trade was, how much risk is in a particular trade, how much profit is in a particular trade. The only thing that we care about is our net liq value. Is our account value going up or not? That's the bottom line. And then we obviously look at that number based on a percentage rate of return. Okay? Big non-equity correlation. That's one of the ways that we get less risk than the overall market. We also short in our portfolio, just much like a hedge fund does. So we not only have the ability, but we actually do make money as markets go down. All things being equal, we would prefer bear markets. Of the last 3 years, and the first year out of the gate, we made 55% return. Nevertheless, of the last 3 years, last year, the bear market, been the best year we've ever had. We would prefer that markets do nothing but go down every single solitary day, because that's the markets that we outperform the market in the best. It's one thing for the market to go up 1% and us to go up 1.1%, and we're in this battle to try to see who wins at the end of the year. It's a whole different ball of wax when the market goes down 1% and we go up 1%. Now you got that 2% differential, and we're just absolutely killing the marketplace. So from a selfish standpoint, from a results standpoint, I would prefer that the market do nothing but go down. How many people can say that? Yeah, I'm invested in the stock market. I pray every day it just does nothing but go down. We perform really well in that environment. We go short, we go long, we use credit strangles to enter those short and long positions. We use anchor trades, we call them anchor trades. It's a poor man's covered call. It's a leap covered right with a call or a put. So it could be bullish or bearish. It could be long or it could be short. And those are the setups that we use. I said that we're very heavy in non-equity correlation. That is a way for us to get diversified. That is a way for us to diminish the overall risk in the portfolio. It's a way for us to diminish the volatility in the portfolio. Being in things that are in the market, but not of the market. Right now, we have a crypto position, a nat gas position, an oil position. We just took off a silver position. We've got real estate, we've got bonds, we have uranium, we have lithium. We have all kinds of different things that, again, are in the market but not of the market. If the Dow crashes by 1,000 points today, it doesn't affect these things, okay? Results, performance update. Well, let's go through our results. The last couple of years have just been absolutely amazing. But if you look at our current 2023 year-to-date results, this is through the month of September, the end of September. Again, 2021, we crushed the market, 54.5% return versus 27% in the market. 2022, we did better than ever. The bear market lost almost 20%. We made 22%. We absolutely crushed it last year. This year, the market is performing above average. Okay, now it's come down a little bit here in the last month or two. You see here in some of these numbers, you can see right here that in the month of July, it was up almost 18%. Then it dropped to 16%. Now it's down around 12%. So the last 3 months the market's given a little bit back, but we still have 1 quarter left to go in the year. And if you annualize the market out, it's on track still for a 16% return on the year. Guys, that's so above average. You know, I know we're just like, unless it's going to be 50% a year, I'm not interested. 16% of a year. If you told people you could invest in a index fund that is passive and tracked the S&P 500, and it would lock you in for 16% a year rate of return, year after year after year. If people understood rates of return and historic results, they would jump all over that. That is so far and above average. And yet, as good as the market has been this year, we're crushing it. We're just crushing it. I don't know how else to put it. We're up 16.64% versus the S&P 11.82% through the end of September. I will just give you a little hint. We're 2 weeks into October, and we have stretched that lead even more. You may say, well, that's not crushing it. You know what it is? Crushing it. It's 39% better. It's crushing it, guys. We are absolutely crushing this market. So again, we're up about 16.64% through the end of September. You can see where we're at versus where the market's at. We've had some ebbs and flows here. We got caught up in 2 situations that set us back a little bit. We got caught up in the regional banks as they got pounded, and then we got caught short the AI stocks as they exploded. So it took us a couple of months, and you know what? This is one of the reasons why we say this is investing. You're not staring at a screen looking at your 401k or IRA every day. At least I hope you're not. You shouldn't be with this either. This is long term, and we are measuring our results year over year, 12-month period to 12-month period. Okay. And again, it doesn't matter. It doesn't matter if we're in a bull market. It doesn't matter if we're in a bear market. It doesn't matter if we're in a crazy market that shoots up and then crashes down. We consistently outperform this market. So great setups. If you want to go to our trading room, you can. That's Trade Live with us. Okay, that's our live trading room. But if you're more interested in a passive approach, something that only takes 5 minutes a day, something that has stellar results, you can go to tryatmforfree.com. You'll get a link to our Discord room where we have all of the trade asset allocation model set up for you. You get a link for a Zoom. You can schedule a one-on-one Zoom with me. I'll answer any questions you have. I'll walk you through it step by step. So that is our asymmetric trade management. That's our results all the way through September of this year. Just again, crushing it, guys. You know, I know it sounds like hyperbole when you say, oh, this is life-changing. You know, this is life-changing. But I really do believe that money absolutely is life-changing. You can have better health if you have more money. The more money you have, the better your health can be because you have access to better care. I know this for a fact. I've experienced this in my own life. So is it life-changing? Well, I don't know. You know, we have to make assumptions, and assumptions make a you-know-what out of you and me. We don't know what the future is going to hold. Nobody knows. But I do know that the calculators, the compound interest calculators, tell us that if you put 70 grand in for 10 years at 30% per year rate of return, in that 10-year period, you got $1 million. Okay. Now you might say, okay, 30% a year. It's pretty high, isn't it? Well, right now, even with the missteps that we had earlier in this year, right now, our 3-year average rate of return, that's a 3-year average rate of return, is 33%. Again, you never know what the future is going to hold. But what I do know is that we have a strategic advantage over the marketplace, if nothing else other than the fact that we hold short positions, so that when the market goes down and everybody else in their ETFs and mutual funds and IRAs is losing money, we're making something. Even that alone is enough of an edge to say, you know what, I might want to check this out. So I do plan on, I started 3 years ago with 25,000. That's what I started with. It's about 75,000 today. Hoping, you never know, but I'm hoping to finish the year around 80,000, finish the next year above 100,000, and just continue this march all the way to $1 million. So that's the plan. So if you are interested in investing rather than trading, and you are looking for something that is absolutely stellar, I've told everybody that will listen to me, hey, if you think you have a passive investment, a mutual fund, an ETF, whatever it is that your financial advisor has sold you into, if you think you have something that is better than this, something that is producing better rates of return with lower levels of risk than this, that is passive in nature, not talking about trading, we made $1,000 today trading the S&P and the NDX. It's not what I'm talking about. I'm talking about passive investing here. If you think you got something better, man, I'd love to hear from you. I would love to hear from you. I think our results speak for themselves. So check it out. Try atmforfree.com. You can come in for 2 weeks for free, chat with me, get a Zoom scheduled up, and we'll walk you through it step by step. Also, if you want to get in touch with me, you can go to scottstewartcontacts.com, and love to chat with you guys. Hope you're doing well with your trading. I hope everything is all green and making money for you guys. Take care. We'll talk to you with next month's update on the ATM.